Good afternoon. Dan Fitzpatrick here, stockmarketmentor.com. Just a quick one today. We've got Skechers and also Deckers that are working really, really well. We'll look at Deckers, and you can see this is tracking on the weekly chart right along the upper Bollinger Band, which is what you want to see a stock do. That is a stock that you own. Like the breakout on this, just a technical level, I'm not talking about a pullback here, but on the weekly chart, the breakout was right here a month ago. And since that time, the stock's up 15%. So typically, this is not the time to be buying this stock. The rule, if you want to call it that, it's something that Bill O'Neill espoused, is after a bona fide, like after a proper breakout, which this really was, you want to start taking profits at 20% if it goes that high. In other words, if you're in a winner, then once this thing is up 20% is when you kind of want to start scaling out. And that's about 20 points from where it is right now if it goes all the way up there. So at this point, for me, I would pass on this, even though this broke out hard today. It ran up above this level of resistance. So it's kind of like we got breakout and then another breakout. Volume still below average here, but we still have an hour and a half to go in the trading day. So we may see heavier than average volume by the end of the day. But for now, it's a little bit kind of unimpressive. And you want to see on a stock that's running higher like this, you want to see it running higher on an increase in volume, meaning there's more activity and more activity here. There's really not. So I would just be careful about this stock right now. I wouldn't be buying it. Frankly, I'd probably be selling into this. I wouldn't just dump it all. You want to be patient with your winners because they're the ones that'll reward you the most, obviously. But I would start kind of trying to rack up some partial profits on this. Now, Skechers, if you look at the weekly chart on this, really the buy point, the latest one anyway, is down here. This is really extended. It's gone up 25% or so since this last low here. So this would be another one where I wouldn't really be eager to buy the stock because it's running so stinking hard. The 8-day moving average, exponential moving average, is this blue line. It's not even being tested. So and by the way, look at the volume. It's lower than average volume. So if you're in this stock, I'll say it again, be patient with it, let it run. It's working. If you're looking to buy this stock, I really just question how much potential upside there is reasonably, how much potential upside there is relative to how much the stock could pull back. And like, let's say if it pulled back to the 8-day EMA, we'll call it 54.50, then in that, it's actually, 54.48. Anyway, that's a 5+% loss. And so if you're buying it here, can you expect the stock to run up 5%, which would be to 60? That'd give you a 1-to-1 risk reward. But if you really want the appropriate risk 1 to make 2, then you're going to have to look at a 10% move. You think the stock can run up 60 to 63 without some kind of a pullback. Like, this is the way you want to frame your stock trades. So I would say, in light of what I just said, this is a real risky trade. It's just a very risky trade to make right here, but it's a great stock. You want to own it. Just wait and be patient for that. By the way, just giving you the heads up on this, I am teaching a course, a webinar, not this coming Saturday, but the following Saturday, on some real novel cutting edge stuff and giving people a chance to get in on the ground floor. but it's actually just for members only. That includes trial members. So, and this, I'm not like pumping this here. I've been working on it earlier today, so I'm mentioning it now. If you're interested in learning more about it, you need to be a trial member. That costs a whopping $7. So if you want to learn more about that, then just sign up to be a trial member. If you don't like it, you can always cancel. It's okay. It's only $7. So you can, and it's $7 for 14 days. So you'll be riding through that webinar. But I think it's a really good thing. It's the most important class I've ever taught. It's on a Saturday. That's how important it is. Otherwise, I'd have just put it on a weeknight or something. I want to make sure everybody has an opportunity to do that. So again, you got to be a trial member. You can't just be on the free email list. And all the members already have a link, and I've got a lot of them that are already enrolled. So anyway, you can check that out if you want. I'll see you next time.